Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris Rapeseed, Winnipeg Canola, and Malaysian palm oil. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of these patterns, levels, analysis, or any related items on these my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, Paris Rapeseed. Prices during late April and May pushed up through some pretty significant congestion dating from September 2012, between 5.13 and 3/4 to 5.19.5. However, prices ran into a roadblock in early June at the March 23 high at 5.40 and 3/4 and dropped off until 4 weeks ago, when we had at the time a small gap-filling recovery, this time halted by another roadblock, or should I say a couple of roadblocks. The first and possibly the more significant was the neckline extension, currently at 5.28 even, of the April to August 2024 Head and Shoulders top, a neckline that throughout mid-late May to early June the market tried making into a base of action, which is something we are very familiar with today. The second, and to a lesser degree obstruction, was the July 23 high at 5.26.5, a congestion I also pointed out 6 weeks ago, and one we are also familiar with today for a similar reason. Anyway, the action 2 weeks ago had been quite interesting, with a third gapping move higher, but a gap that had no intention of becoming an exhaustion gap, as prices pushed higher still through some stratified congestion all the way through the 61.8% absolute Fibonacci line of 553.25 and developing a new pattern, the dark blue mid-April to late June bullish shift pitchfork. Prices moved up this week to the dark blue upper time, currently at 558.25, pushing through this today by opening above it and utilizing the breached dark blue upper time as a base for a move up to tackle the next set of resistances. The February 23 high at 565 even, getting hit right now. The congestion at 569.25 to 570 even, containing the September 2022 low and the August 21 high at 573.25. I should point out that at the start of July I said, and I quote, "I suspect this newly drawn dark blue bullish shift pitchfork may become a significant part of this commodity's future, so watch and see," end of quote. Try and cope with this move higher, I have drawn a mid-July to date short, bright green, extremely acute bull channel, currently 557.5 to 572.25. I am not in love with such an acute bull channel, even though this looks like the best of all the ones I've seen in oilseeds and veg oils. It is still very, very steep, and I would retire it in a heartbeat if it was compromised. That all being said, it does work for now in showing the way higher in this market. Winnipeg Canola. Just the one pattern still shows the overall way forward here. This longer term pattern I spoke about 21 weeks ago when I said, and I quote, "We've also drawn in the meantime a March to December 2025 bullish Andrews pitchfork," end of quote. This pitchfork, highlighted in bright pink on my daily chart, has so far not had any tines, even now, not had any tines tested, bar the lower tine right back at the start, and that held up pretty well back then. Despite this, I still think this pattern is very important for now and in the future, so please just keep it in mind and keep a watch on it. In fact, we are today moving up towards the bright pink middle tine above, which is currently at 849.70. There are other shorter term patterns that have affected this market, notably a pattern I introduced in early July, but one we have seen prices break higher from, and this week over the bright green upper tine, currently at 840.60. It is the bright green mid-April to mid-June bullish shift pitchfork. To be honest, this pattern has not proven to be of any value to me, and I think to you as well, and I'll retire it before next time. The final pattern is a bit speculative on my part, It's a small, very acute, late June to date bull channel, currently 807.60 to 840.60. Now, I drew this to try and quantify the steep move higher since late June, and this bull channel, it did it. It did this. However, it is very, very steep, even though it has the appropriate number of touches per side. And despite this, I still may well retire it next time. What's Malaysia crude palm oil? To start with, please take no special significance on the color of my notations on this daily chart. My charting system sometimes goes rogue and decides it wishes to use other colors, in this case bright red for some of my notes, but it does not signify anything special. Okay, so as I've done here for most of last year and now into 2026, I'd recognize the wide congestion area that was overhead but which became a support, then a big congestion, now edging into becoming a support once more between 44.08 to 45.59, which had since late March been up over it by one attempt, one failed attempt lower mid-April, finally punched their way down through it 10 weeks ago, but could not sustain the move lower with an original gapping action higher, changeover or otherwise, which topped out a number of times since the end of April to date. We seem to be close to finishing these heartbeat movements up and down with a seeming resultant conclusion. Prices pushed higher this week, significantly higher. Yesterday, in fact, up through the bright green upper bear channel line, currently 46.14, of the bright green April to date shallow bear channel, which is 42.78 up to 46.14. Thus, this leads to potential targets topside of a primary target X up at 48.80 and a secondary harder to reach target X1 up at 49.51. Both are around resistances. The former is around the high for this year at 48.88, whilst the latter is just under a pair of 50% Fibonacci lines, especially the 50% Fibonacci line of the July 2019 to March 22 move at 49.64. That all being said, this all comes down to the same questionnaire I've been asking for the past 10 weeks, and I quote, "The question here is the same as elsewhere in the veg oils and oilseeds. With a cap higher and significant supports below, is this market forming a topping action, or is it some form of bullish halfway hesitation?" End of quote. I continued and I quote, "Here it is not so obvious, and indeed it's not obvious if we are forming either a topping action or a bullish halfway hesitation." End of quote. All this has left us with is that 44.08 to 45.59 congestion, as well as a pattern I drew 8 weeks ago that is increasingly becoming significant. A mid-April 26 to date, very shallow bright green bear channel. Right now we are breaching the top end of this bright green shallow bear channel, and this is where another piece of previously spoken information comes about and becomes important. 6 weeks ago, I said, and I quote, "So this is the current pattern here that is driving the market, and I would watch this one very carefully for the next direction. However, just be aware of the possibility of false breaks, which given what we have created could be quite high." End of quote. That has been my view these many weeks, but I have, as I mentioned earlier, noted the rising lows and fairly static highs of a bullish incentive, and a new pattern has emerged. An early May to date ascending triangle pattern, highlighted in dark blue on my daily chart, and it's currently 44.93 to 46.69. There are no targets for this pattern as yet. We have just breached, not broken this pattern on the upside, but I can once more lay out some potentials for what could be either a break higher or maybe lower, if this breach higher turns out to be a false break out of this ascending triangle. Thus, the primary potential on the top side would be 200 plus 241 ringgits from a confirmed breakout from the ascending triangle pattern. The secondary harder to reach potential of plus 344 ringgits from a confirmed breakout of the ascending triangle pattern. Please note, even now we have the possibility of false breaks, so please pay attention to this. Thus, just in case this is a false break higher, with a primary potential on the downside of minus 151 ringgits from a confirmed break from the ascending triangle pattern, with a secondary harder reach potential of minus 344 ringgits from a confirmed break out from the ascending triangle pattern on the downside. Now, it's time to see, hopefully by next week, if we will have targets topside or not.
Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.